Fellas, how we feeling?
Oh, it hurts. It's so bad today.
Bitcoin down almost 50% over the last 6 months. It's kind of funny. This is maybe the only industry where people actually kind of have fun when they're getting destroyed. When their portfolios are losing the equivalent of like an Audi A5 every day. They're just having a good time.
You wouldn't have made it this far if you weren't able to step back, depersonalize, and enjoy the chaos of it all. The maxis are right. DCAing is the only thing that keeps you sane.
I like that you changed the unit of measurement in the crypto landscape from Lambos to Audi A5. We've changed a lot.
Welcome back to the Blockspace Pod, brought to you by CleanSpark. Today's roundup is a special Everybody is Poor Again edition as Bitcoin nukes to 65K at the time that I'm recording this introduction, to the lowest level that we've seen since 2024 with the run up to 100K. In addition to a quick market update, which includes some commentary from some of our favorite traders and analysts, we also cover the news that French authorities are pushing back against Mara's controlling stake in Exaion, the data center subsidiary of France's EDF national energy operator. We also touch on Tether's news that it is investing $100 million into Anchorage Digital following a week where it released its Mining OS open source Bitcoin mining management software. And then we wrap up the show with two CAPEX stories, one from TeraWulf acquiring 2 brownfield sites that could add up to 1.5 gigawatts to its power portfolio, and Cipher Mining going after a $2 billion secured note that was so oversubscribed that $13 billion in bidding hit for that note this week. You're listening to the Blockspace Pod. We will be right back.
Alrighty, y'all. Fellas, how are we doing? How we feeling?
Oh, it hurts. It's so bad today.
It's kind of funny. This is maybe the only industry where people actually kind of have fun when they're getting destroyed. You know, when their portfolios are losing the equivalent of like an Audi A5 every day. They're just having a good time, you know?
We're masters of self-deprecating humor. You wouldn't have made it this far if you weren't able to step back, depersonalize, and enjoy the chaos of it all. I mean, this is a tired story. The maxis are right. DCAing is the only thing that keeps you sane.
Matt, what's your take? How you doing this morning, man?
Oh, I'm doing great this morning. I like that you changed the unit of measurement in the crypto landscape from Lambos to Audi A5. We've changed a lot in the last.
Is an Audi? I don't know cars, Matt. Is an Audi A5 higher or lower? Is it more expensive?
I'm gonna divert that to Colin.
Okay.
But yeah, I mean, such is life as someone that invests in Bitcoin. Volatility is a feature of the asset, right? If you don't have the stomach to handle the lows, be in spot, DCA, up your DCA at lows, there's less to celebrate at the highs, right? So you got to take this in stride and keep your fundamental long-term vision intact, right?
Yeah. Well,
what did Michael Saylor say? Saylor said something about like volatility is the gift.
Volatility is life or something.
Yeah, as a gift to Bitcoiners or something.
That's true. But if you just look at, and we won't spend too much time on price, I want to get some trader commentary up, then we'll get into the usual news roundup. So if you're listening to this on RSS after we publish this live stream, if you're not interested in this, go ahead and skip about 5 minutes or so, 10 minutes, and we will get into the news for this week. But I mean, just a brutal 6 months if you look at this. We're on TradingView here. I mean, Bitcoin down, almost 50% over the last 6 months. Just absolutely insane. I feel like this is a sell-off that, for me at least, I've never. Oh, sorry, I didn't have trading.
No, I have to show this Michael Saylor tweet. He said, if you want to get me a birthday gift, which was yesterday, go buy some Bitcoin for yourself. And it shows him soldering what could be a hash board.
I think it's a fake board. It's actually it's a cyber hornet abdomen.
It's a cyber
is what that is.
So I had to do that. I don't mean to distract you. Let's go.
No. It's okay. I just wanted to throw up the chart just to show that this to me really feels like a historic sell-off. As Checkmate, he points out, this has probably something more in common with 2019, 2020 price action than it does 21, 2022 price action. Take that for what it is. We'll get that commentary up here in a second. But just a few notes from some of our favored traders in the block space realm. This is Peter Brandt, love him or hate him. He has this quote. He says, "Hey, crypto followers, the nature of the decline in Bitcoin, now 8 days of lower lows and highs, has all the fingerprints of campaign selling, basically a institution unwinding a position, not retail liquidation. Seen this before hundreds of times over the decades. Never know when, of course, the pattern ends." He also says, "Note to trolls, the red lines on this chart are discussion points, so put away your screen capture tools," because, he's got the lowest bar here goes down to about 45,000. So he makes a pretty good point that when you look at the structure of these cells, like honestly, starting back from October, 1010, the whole Binance thing that people keep talking about. I'm not pointing a finger at Binance specifically, but if you look at the structure of these cells, it's like, it seems to be very structured selling, very intentional. And it seems like maybe like a few big funds or big players are getting blown up in this whole price action. Few more things to note on, and then I'll toss it to y'all. If you're looking for support or clinging on for dear life, trying to figure out where, you might be able to get some footing on this cliff that we seem to be falling off, Checkmatey has a good post on Checked On Chain, where basically this air pocket from 70 to 80K, where Bitcoin just ripped through this, at the end of 2024, when Trump was elected and we went up to 100K for an all-time high. There's basically no support in that zone because we never tested anything. We just ripped right through those levels. And he's basically looking at a demand zone between 55K and 70K for long-term support. That's when we had kind of consolidation or chop solidation, as he calls it, after the ETFs were approved. And the last thing I will throw to is a crypto trader and longtime poster Flood. Y'all will know him if you've been on Bitcoin Twitter for a while. Says, quote, "The only hope we have is that Bitcoin front ran this equities negative 10% correction." He's forecasting that's where we're going to get in equities over the next month or so, I assume. And then AI CAPEX stabilizes. As a large Bitcoin holder, I'm not loving the prospect of betting on something that hasn't really historically happened, but here we are. And I wanted to highlight that because it's a little bit of a black pill. But the thing that makes me worried about this is we've already had a very deep, very rapid sell-off. And if you look at the macro picture in terms of other instruments, they haven't had nearly as much selling pressure. And I've always been of the mind that if we get a real drawdown in the broader market and a recession, Bitcoin is going to get absolutely hammered, kind of like what we saw with COVID, the flash crash in March of 2020, where it lost like 40 or 50% of its value over like 2 days. That worries me. But Matt, you had more thoughts on that, or perhaps a counter to that perspective.
Well, I think the counterpoint to that would be that Bitcoin has also served to some extent to be a canary in the coal mine for these sorts of things, and that it really sniffs out drawdowns and is the first and hardest to fall, but then can also be the first and hardest to recover, to come out of something. I mean, I'm not saying that this drawdown is over, by any means, and that Bitcoin would do well in a major equity sell-off or recession mode, right? These things can draw out. But I do think, Bitcoin sometimes sniffs out liquidity in global markets. And yeah, sometimes it also has its own micro market structure events going on and moves independently. But at the same time, it can also sniff things out first, be the first to move, right? It trades on nights, it trades on weekends, it trades on holidays. Not everything works in that way.
I think that's a really good point. And it's something that I've been kind of telling some of the non-crypto folks in my civilian life about, hey, y'all should be paying attention to what's going to happen with equities because Bitcoin's getting crushed. And I think, to your point, Matt, that's probably a leading indicator for some more turbulence within more traditional markets. One last thing to note on this before we close and start getting onto the news for the day. A news bit, but Charlie pointed us out this morning. Gemini planning to lay off 200 staff. And this is really, as you said, Charlie, the lead for the story. They're going to exit Europe and Australia. So if you needed a news story to say like things are getting bad, I think you can point to this headline.
Yeah, I will say 200 people for all of those markets seems like actually not that big of a team. Maybe I'm underestimating or overestimating like what you might need to run an exchange in those countries. But that's not a huge number of folks. So, in terms of crypto jobs, probably not that impactful. it is a sign of the times because Cameron and Tyler have been really big into stuff. In fact, I think they actually said they weren't going to write some big political donor checks this year. So it seems like they're paring things down. I also wonder, like, I see Coinbase getting into a lot of they're starting to look kind of like a traditional trading platform. They're getting the RWAs, the poly market, the prediction markets. Like, has Gemini leaned into those types of products as hard? I don't know. We'll see. Gemini's been around a long time. A lot of people may not know this, but they started around the same time that Coinbase did. And they go back as far as they're part of the Coinbase, Kraken, and then Gemini, like American crypto titan cohorts. So I don't know if any of those other companies have had layoffs at this point yet.
Yeah, two things. They do offer stock trading. I don't know how it differs or is similar to what Coinbase and Kraken offers. I imagine a lot of these exchanges probably have similar baskets of equities that they allow people to trade. The other thing too, going back to 200 people across, to a continent and then basically a continent, but a country in Australia, right? That's I think it's just it evidences the fact that those are just much smaller markets compared to the US. I mean, this is something that we covered with CoinShare CEO on a recent podcast about the ETF volume in Europe. If you look at it actually compared to the US, it seems small, but it's actually comparable to other trading volumes for other instruments across the continent. So, but we'll leave that where, unless you have something to comment, Matt, and then we can move on to Bitcoin mining stuff.
Yeah. I think you have to have in context here that they IPO'd right in September too, and I think they're down around 75%. I think this is partially a bit of post IPO restructure, strategic pivot. Maybe break some not so great news when you're already down quite a bit. Another thing is, like, we were just talking about Bitcoin price, right? Crypto exchange layoffs is also a common bear market event, right? In 2022, mostly, but I think some 23 too, we saw layoffs at Coinbase, Kraken, blockchain.com, right? You name it. These things are cyclical and kind of just a part of the times, right? Part of the bear market times. These exchanges do a lot of volume in bull markets, a lot of trading and exuberance come about. That brings about a lot of revenue. They hire, and then on the downturns, sometimes people get let go. Although I don't want to tie that too much together into that cyclical cycle, because I do think part of this is we think we're getting regulatory clarity in the US, right? The policy environment has been a lot more favorable. Maybe we focus here. That's kind of how I read the story. But it is also, I think, an indicator of the price environment a bit that we're in.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at CleanSpark.com.
Let's go ahead and move on to the hash rate difficulty update. Difficulty weatherman Matt, got to shake off the rust a little bit. It's been a minute. Happy to have you back. And what a good time to come back. I mean, you have a lot to talk about today because hash rate is getting crushed. Hashprice is getting crushed. We have potentially a super massive black hole. Just kidding. A super massive difficulty adjustment coming. So, Matt, what are we seeing in the forecast for the next week?
We are seeing a major difficulty adjustment coming about that is going to reflect the slide in hash rate. Is what we're looking at. We already just had a over 3% downward difficulty adjustment, right? But we're estimating here soon, we're 86% of the way through the epoch, a double-digit difficulty adjustment decline. Hash rate has taken an absolute dump. And I mean, yes, that is typically...
Wow, I didn't realize.
It's crazy.
Holy smokes.
Yeah. So you got it on.
We're now we're decisively under a zettahash.
100%.
Yeah, absolutely. And I think, interested y'all takes, it's a combination of the weather curtailment that hit the States as well as the price environment.
Yeah.
Well, that's pretty clear to me. So it looks like it's bouncing a bit. We'll see how much comes back online post curtailment, right? But we are down quite a bit. Let's look at hash price, Colin, see where that's at. Because the difficulty hasn't adjusted yet, so this hasn't fully reflected the change in. Yeah, so this is gonna get some support, right, when we get the difficulty adjustment. But right now, it is absolutely puking on the hash price. We are, looks like, just about $32 per petahash.
We're at 30.30.
30. We're at 30.
Yeah. And it might have even broken below. Did it break below? Yeah, we printed below 30 earlier today. And I was talking with Ben Harper from Luxor and Hashrate Index the other day and asking him for daily all-time low and just spot all-time low. And I think he quoted like something like 32 the other day. And now, I mean, we just keep printing new lows on this, right? And to your point, Matt, we will look at this. This is crazy. We will have support with a new downward difficulty adjustment or negative difficulty adjustment, but 5 out of the last 6 have already been negative. So if we get this next one, it'll be 3 out of the last 6. That's, I won't say unprecedented. Well, it actually might be unprecedented because we didn't even get that in the China mining ban because some of that hash rate came back online a little more quickly, or miners were just revving up old machines to take advantage of the fact that hash rate had dropped by about 50% from that event. But if you look at this, I mean, this string of downward difficulty adjustments is brutal. And going back to what you were saying, Matt, some of this, the winter storms in the U.S. really ravaged the Southeast and the Midwest. Decent amount of hash rate there for sure. Not as much as Texas, but still a significant chunk. But in addition to this and Bitcoin's price decline, a lot of the big miners are starting to wind down their machines. And I've been talking to some brokers, and they said that the used market right now is popping off because you have all of these public miners and mega miners who are trying to pivot towards AI and HPC selling into the secondary market. The market for new machines is basically dead at this point. It's on ice. I would not be surprised to see the big manufacturer curtail their production for newer machines over the next year or two.
Yeah. I'll say that as far as being in Oklahoma, the middle of all this, and Matt's down in Texas, like, it got a little cold over last weekend. But I don't think we saw really, I mean, curtailment is last week's story. If you look at, again, I rarely say you should do this, but look at the smoothing, 3-day moving average. Like, it's as if everybody turned off and then just didn't turn back on. Even though it went from a little over a zettahash, 1.1 zettahash down to 800 exahash, 0.8 zettahash, or back only up to 930 or 0.93 zettahash. And so I wonder if the storm happened to coincide with a lot of these big miners pivots out of Bitcoin, and they just decided, oh, well, okay, instead of curtailing, we're just going to transition out. So
yeah, I mean, you kind of have a 1-2 punch because you can see here on the 3-day, to your point, Charlie, the storm hit, I believe, on the 23rd and 24th. So we dropped from 1,053 exahashes down to 800 on the 3-day. Not as good as the 7-day, to your point, but in terms of real time, it's a little bit better. And you see it recover by about 120 exahashes, but not as much as clearly the price is the second punch here, to where after they turned off, it's well, it might not be economical to turn some of these back on. But definitely margins are super compressed right now. You'd expect older generation hardware to be unprofitable. Only newer generation stuff, especially for those who are at middling power ranges, are profitable right now. But we'll leave that where it is. Go ahead and move on to news for this week. And I think the biggest one, we'll lead with this super interesting story because it contradicts something that we published a week ago. It seems like there's some disagreement within the French political apparatus, but France stalls Mara's acquisition of EDF data arm over sovereignty concerns. So back up to last year, Mara announced that it was going to take a 62% controlling stake in Exaion, which is the Électricité de France's data center arm. EDF is the national grid operator for France. It's a nationalized monopoly over the electricity market, and they have a data center arm called Exaion. And Mara wants to take a controlling stake in that. We reported last week on Blockspace that the French Treasury had actually greenlit the deal. I'm going to hop over to that really quickly. And also, by greenlighting, they did not strike out or challenge a non-compete that Mara put into the contract for the controlling stake that would disallow EDF from developing any AI and HPC operations for commercial use. In other words, they can only provide power to an AI or HPC data center. They can spin one up for internal use, but they can't do anything else in terms of doing a joint venture or entering into any business relationship with an AI and HPC data center company for a commercial use. They can only sell power to it or do it for their own internal use, which is a crazy non-compete. And it's insane that they even snuck it in there. This was first reported by a French outlet called The Big Whale. And as one of their sources says, it's open season for the Americans, while also basically making the point that Mara capitalized on ignorance on part of these French companies where they just didn't really know the game that they were playing. But going back to the news for today, now some French authorities are actually trying to put a stopper in this. The French government has intervened in the plan for Mara to acquire this controlling stake in Exaion, requesting a deeper review of the transaction, basically making the argument that there's like a national security and sovereignty risk with this. So a lot of back and forth on this. It was looking really good for Mara there for a second. It was like they were going to basically have the AI and HPC, market cornered in France, at least, disallowing the national grid operator from doing anything within those data center sectors. But now it seems like this is being put on pause. Kind of an interesting interesting story, and also shows that there's clearly some internal struggle within the French political apparatus for whether or not this should go through.
I think AI is increasingly seen as a strategic asset, right, geopolitically, globally, especially when tied with national energy assets, like is the case here. But yeah, and what does this say about U.S. company interest and initiatives in Europe? Maybe like a broader theme story that kind of touches this too. But yeah, the fact that non-compete seems pretty constraining on the French side. I think it would have been really good for Mara, but I'm pretty doubtful this is going to go through now. Charlie, what do you think?
I don't have a super strong opinion. It's in France. How much insight could I possibly have? So
A
little. I think Matt's spot on. Matt's spot on. AI and energy is now a national strategic asset. It's kind of surprising. It's really surprising me that the pushback against AI from like the folks I know here in the US seems to totally ignore this fact. They get sniped into like obsession over like AI images, AI taking from artists, which is valid. It's just like, I don't think you get like the real what actually is going on.
That's a good point. I agree with you, Matt. I think at the very least, the non-compete will probably be struck. Maybe they'll allow this controlling stake, but we'll see. Considering that the U.S. and European relations are kind of on the edge right now, it's interesting to see this story pop up.
Hey, Charlie here. Guess what? We just announced our next Bitcoin technical conference, Op Next.
That's right, y'all. Op Next is back for 2026. We're running it back after a successful event at Strategies HQ in Tysons, Virginia last year. And this year, we are bringing it to the Big Apple at the iconic Times Center in Midtown Manhattan.
We're hosting the big names and projects that you recognize, like Robin Linus of BitVM,
Nick Jonas of Blockstream, Antoine Poinceau of Chaincode Labs, and Calais of BitChat will also be present.
And this isn't just for the devs. We have institutions talking with the developers. That's what Op Next is all about. We have Robert Mitchnick, head of digital assets for BlackRock, in the building. We've got folks from mining pools, investor funds, Bitcoin startups, and other groups.
With a ticket, of course, you'll get access to all the high signal programming and networking you could want. You'll also get coffee, catered lunch, and access to the after party at PubKey.
If you want to go VIP, you'll also get access to the speaker dinner following the event and an investor brunch on Friday.
Tickets are capped at 300 and early bird tickets are already sold out. If you want to save yourself a spot, go to opnext.dev. That is opnext.dev. Use code podcast to save 20% off a GA ticket to the event.
Ticket prices go up every few weeks, so don't wait, y'all. Lock in that ticket today.
We'll see you April 16th at the Time Center in New York City.
All right, I'm going to move on to this story, and I'm not going to spend too much time on this. Just kind of an interesting week for Tether. Tether is going to invest 100 million, or has invested 100 million into Anchorage Digital. Anchorage is I assume the issuer. They say the as a definitive article in this, so I assume that means the sole issuer of USA. I don't know what you call that T.
USAT. It's
USAT?
USDT. Yeah.
Well, no, but like with the crosses in it, because it's not, USAT. I'm thinking of USDT. I'm stupid. Yeah, so they're the sole issuer for USAT, which is Tether's compliance-focused stablecoin, and this comes on the heels of Tether launching Mining OS. It's an open source Bitcoin mining management software earlier this week. It's interesting, as always, Tether kind of operating in multiple different arenas. The Anchorage investment is interesting. It's strategic equity investment. So you'd have to think that part of the reason why Tether wanted to do this is not just have exposure to the company, but they want to, they want to have a say in where the company goes directionally, considering that they are the issuer of this compliance-focused stablecoin.
Tether is just one of the most fascinating companies that exist to me. Their fingers are in so many different baskets. They're like one of the largest Bitcoin holding corporations. They're stockpiling gold.
They have 140 tons of gold.
I think they're the largest gold holder that's not a
non-sovereign gold. Yeah. Largest non-sovereign gold purchaser as of
that gold hoard rivals South Korea and Greece. I mean, Greece, okay, but South Korea, no offense to any Grecians who gets into this.
The live broadcast, baby.
But yeah, Tether's got, their fingers in mining, their fingers in AI. I want to say I've seen a farming-based investment or two in Latin America. I may get that wrong, but you guys should do a full report episode on Tether. I think they're really fascinating, and how much they have changed over time is dramatic. But yeah, I mean, Anchorage, it was a big deal when they got the federal charter as a bank, right, in the States. It makes sense, I think, for Tether to have a Genius compliant stablecoin. Their USDT is not stopping in its growth, right? Stablecoins internationally are still huge. Still, I think the bigger story as far as stablecoin usage goes, even though the Genius Act passed, right? Stablecoins have been used much longer than just since July of last year. I'll hand it back to you guys. I don't want to get lost in the Tether stablecoin rabbit hole.
Well, no, I think that's all good context. I mean, they are undoubtedly the most interesting company in the digital asset realm. And like you said, just fingers in so many pies. All right, we've got two more stories to get through. We'll go quick on these, and I won't spend too much time on this one in particular because I think the second one is just a little more interesting. But I mean, this is a massive deal for TeraWulf, but TeraWulf is acquiring two brownfield industrial sites one in Hawesville, Kentucky, and Charles County, Maryland, for a total potential gross load capacity of 1.5 gigawatts. The stock went up 10% on this news, and if the transactions close, the firm's total power portfolio will be 2.8 gigawatts across 5 locations, of which 642 megawatts are currently contracted and 2.2 are in the pipeline. So it seems as though, if I'm remembering correctly, let me see, one of these is the Maryland transaction hasn't closed. It's pending regulatory approval and consent from a third party, assume someone who has a stake in that land. But the Hawesville, Kentucky one has closed. Just massive expansion of their power portfolio with this. And with the brownfield sites, they already have the electrical infrastructure on site, and they will be building data centers on top of that for their AI and HPC business lines. The other story to kind of couple with this, because they're both CAPEX stories, we think CAPEX is slowing, but, spending continues to increase with these AI builds. Cipher Mining is pursuing a $2 billion debt offering for its Amazon data center. So if y'all remember from last year, Cipher signed a 15-year, $5.5 billion lease with AWS or Amazon Data Services for its Black Pearl data center. And that will be 300 megawatts fully leased to Amazon. And they are seeking a $2 billion secured note for that build out. Now, some interesting things about this note from Matthew Siegel. It always comes with the receipts and some really good analysis. According to Bloomberg, there were 13 billion orders for this $2 billion bond sale. And the yield for this as a result is about tightened from 6.375 to 6.125% for the interest rate on this. And to give you some context to show you why the market loves this bond so much, apparently, if Cipher is pricing it at 6.125%, you can look at other bonds and other notes out there in the universe of AI and HPC stocks. CoreWeave has bond out at 9.25%, or notes out at 9.25%. Applied at 9.25 as well, and Wolf at 7.75. Quoting directly from Matthew here, the tighter spreads reflect the A1 rated Amazon completion guarantee, which Amazon will cover construction cost overruns. And also, Amazon does not have a stipulation in the contract that they can walk away from this build, whereas others do. So this is a really important thing to note. And I'm not going to name names because I'm not sure which contracts actually have that stipulation. But in some of these pure contracts within the Bitcoin mining AI HPC universe, the actual tenant can walk away if they don't like the way things are progressing. But Amazon doesn't have that. They are committed to the build and committed to the contracted capacity that they have signed with Cipher. So a really attractive note, one of the better ones according to Matthew Siegel. Matt, Charlie, any thoughts on this?
Yeah, I'll hit Cipher first and then the other story. They're raising debt with Amazon's credit, basically, right? Because Amazon's the guarantor on everything. So that is huge. They had contracted revenue already, right? But Amazon is just doubles down here. And so I think that's a big deal. What was the first story one more time?
TeraWulf.
I had something there. Oh, TeraWulf, right? Yeah, because they're brownfield expansion. That's more like, hey, I'm going to buy this access to power, which I think is already locked in as part of this. And I'm going to monetize it later, hopefully to get a tenant and a contract in place. That's how I read this. But there was something I wanted to bring up with the story, even though I know it. This is in Maryland, I think.
Yeah, one of the sites is in Maryland, Charles County.
Okay, yeah, Maryland and Kentucky. I saw, and this is like power grab, right? Power and land grab. That's how I see this. We'll figure out monetization later. I saw there was an ERCOT workshop, not to make everything about Texas. There was an ERCOT workshop yesterday about integrating these large loads into the grid and processes and trying to streamline it. I saw a stat in associated with this that the backlog requests for large loads with ERCOT is 250 gigawatts currently, which for context is 3 times the peak load. That blew my mind. That is an enormous amount of power requests. I mean, holy cow. So anyway, to bring it back to the story, maybe it makes sense to have a power grab for TeraWulf and to figure it out later, right?
Yeah, absolutely. I mean, I think to your point, Matt, it speaks to the fact that companies are going to have to start getting really creative with where they're sourcing this power. I mean, Texas is basically maxed out. If y'all are interested more in that, we had a really good pod with Tom Kleckner, an RTO insider correspondent who's been covering the energy sector, specifically in ERCOT, for a long time. And we're covering some of the changes that ERCOT's having to make because of that backlog, because of the 5-year interconnection queue has just swelled up so much. And they're starting to come out with some pretty strict rules on this, including forcing the actual data center companies to pay for transmission for some of these massive builds instead of have the utility build it. And so, yeah, to your point, it makes total sense that TeraWulf is hunting for power elsewhere. Just a few other keynotes on that for the Maryland site. There's 480 megawatts of immediate power capacity, could scale up to 1 gigawatt. Like you said, Matt, it's like just buy first, ask questions later. Just get the power if you can, and if you build it, they will come type mentality. All right, I think that does it, gents. We don't have a cry corner for this week. We actually led with the cry corner because everyone's poor again. But, still a lot of stories to cover. And, kind of like Matt said, if you have long-term conviction, if you can get past the jitters, you should be licking your chops at seeing Bitcoin in the 60Ks again. So
also, if you got liquidated, you lost everything, start DCAing. Many such cases, many stories of people who lost everything in 13 and 17 and 21 who DCA'd and kept with it and now have something to show for it. So
Yep. Start DCAing with the money left over after you've paid alimony for your wife who just left you for taking out a second mortgage on your house and aping into Bitcoin at 100K. And with that, we will see y'all later. Have a good weekend, everybody. Keep your heads cool. Go out and do something fun. Ground yourself. Go spend time with family and friends. Peace and love, y'all.
Hey, this is Charlie and Colin from Blockspace Media, and you're listening to the Blockspace Podcast, a show about emerging tech in Bitcoin, AI, energy, and markets.
We publish 2 interviews weekly with CEOs, investors, analysts, and anyone else of consequence within these spaces. Plus, we have a weekly news roundup for all the important stories you might have missed from that week. The show is perfect for retail and institutional investors, analysts, and really anyone who wants to keep their finger on the pulse of the stories that are moving Bitcoin, energy, and data markets.
So if you've stumbled across us, make sure to search Blockspace wherever you get your podcasts. And on YouTube, hit the subscribe button, give us a rating. We produce bonus podcasts and other content on our main feed, so you don't want to miss that.
And if you have any feedback or comments to give us, or shows that you would like to see and topics you would like us to cover, hit us up at hello@blockspace.media.